We have a good topic today. I think one, by the way, you guys can thank David for the topic. It was his idea, and I think probably not a better time actually to cover this topic. This is always an important topic, whether you are brand new, like maybe you've never traded and you're just here going like, what are these guys about? Or if you've been around, but you're still dealing with some fear in your trading, right? With some fear mindsets. But I think my focus, David, for this is kind of more like, okay, you're brand new, you're coming to this, and why are there, your title here, David, 5 common fear. Why? Like, why are they common? Why do we have these common fears? But the truth is they are common. We probably have all gone through some level of what we're about to talk about. So that means that it's part of our human condition, I think, right, David? Like, this is just
Absolutely.
something we're going to go through. Would you agree?
Oh, absolutely. I mean, fear is unfortunately so much a part of so many things in our life. And it can affect different parts of our life in different ways, different levels. But when it comes to trading, it can really paralyze us. It's crucial that we work through those fears and through those emotions, because one of the things that I've learned since starting to trade is how much emotions do play into trading and how much of a psychological skill this actually is, versus just being good at numbers. And fear is at the center, at the core of that. And so learning, identifying those fears, learning how to work through those is absolutely essential to becoming, a successful trader.
Yeah, I think, maybe before we jump in, we've got just basically David and I thought that what would be a good idea for this time together would just be, it's really just going to be kind of like a talk, kind of like a chat. We have a few slides just so, we are very smart guys, but actually David's a really smart guy, but we're probably not going to remember all the things we thought of that, we put together that we really wanted to hit on. So we got a few slides to lead us through. That's good for us just as much as it is for you guys. But before we do that, I just think as a overarching framework for the conversation of, number one, kind of like identifying a few common fears, because I'll tell you, some of you probably are acting in some of these fears, but you don't even recognize it. I know that was a thing for me when I started trading, is that I was doing things based on fears, but in the moment, I didn't know that's why I was acting that way. And so we're going to introduce a few, obviously, 5 common fears, and you can decide on your own in the privacy of your own office whether those particular ones apply to you or not. But before we do that, why, I have a couple of thoughts, David, on why. I think it's obvious to us that we don't want to be living in fear. I mean, we don't want to live in fear. We don't want to act out of fear. We can say that, but then specific to trading, you have to take some targeted action to avoid making fearful decisions, right? So there's 2 pieces to this. Number one is that fear produces unpredictable actions. It produces unpredictability in our own actions, in this case, response to the market conditions, right? So fear, and we'll talk about some different ones, produces unpredictability in us. And so even if we really believe that there was a high level of predictability in any certain market condition, if we don't have any predictability about our own actions, then none of that matters, right? So I would say that would be one. Fear produces unpredictable actions. We want to avoid that. I think in life generally, right? And then the second, which is sort of maybe comes before the first, maybe I did this backwards, and it could be worse. And that is that fear produces inaction. I think probably that's actually should come first. The first thing we do when we get fearful is we just want to back away, get away from that situation. Don't do that. Don't talk to me about that. We don't understand it, so we're fearful, and it creates inaction. So maybe I got those upside down. If you get past the inaction part, then fear can produce these unpredictable actions, unpredictable decisions. And so the truth is, though, there's plenty that we can do to not only overcome them, but we have to identify them first. And so that's what we're going to talk about here, is identifying a few of these probably, because everybody's got tons of different emotions and different ties to money mindsets and different experiences. And I mean, gosh, the life experience of each person is a big factor in what you fear and what you don't, or what you've overcome and what you haven't. But so this won't cover every possible trading fear, but these are 5 very common ones that we're going to talk about. And David actually has chosen these 5. I went over them and thought, I don't know I would put any other one outside of that above these 5. You know, I think these were really well put together. So I just wanted to give that as kind of an intro before we jump in and start talking about some of these, David. And I know if we do have, I guess, just the chat feature, right? We have Q&A here for this webinar.
Yeah, we do have Q&A.
Just a heads up, as always, if you guys have not used Zoom with us very often, if you have a question for us specifically, please use that Q&A feature, because those won't scroll past us. Those won't go flying past us. The chat window goes pretty quickly. So if you have something that you really want us to answer specifically, use the Q&A and it will stay there queued up until we get to it. And again, you know, some of this is a little bit of a theoretical conversation, but if you've done any trading or you're in the inaction stage, I think you'll recognize some of the things we're talking about. And there are some really practical things we can do to overcome that. And a lot of that's going to do with how we approach it, right?
Absolutely, Jared. And you know, as we get going in this, we've already covered a lot of what's on this first slide. Essentially, you know, the first thing that I put here is fear can paralyze us, and that's that inaction. You know, and I felt that before. I felt that with brand new things that I was, you know, wanting to maybe step into in the future, but I didn't know anything about it. There was no knowledge there. So there was some fear there, and it prevented me from taking action when maybe I should have. And I've also felt that in a different area where I've had, you know, maybe I didn't fully accept the risk on certain trades, and, you know, the trades went against me. And I remember one day in particular, I had a couple bad trades, or the trades just didn't go my way. And you know, they probably were bad trades, and I, you know, took some pretty heavy expenses on those, and I was paralyzed that day. Like the whole rest of the day, I couldn't do anything productive. Like even just vacuuming the carpet, I was like, can't do it. Like I was done, and I was like, wow, okay, something has to change. And so, you know, that started, you know, a deep dive into really trying to figure out, okay, wow, I need to get a hold of this whole, you know, psychological skill, because this is more than just you know, being good at numbers.
Absolutely. I could fill the entire time with stories of being paralyzed from fear of doing something in trading that I thought I was ready for, and then I got in the moment and was like, okay, wasn't ready for that. What happened? So we're trying to cut some of this off for you if you're listening and you're willing to learn, and you're really, I think the willingness piece is an important part of what we're going to talk about today, because if you're really not willing to be honest with yourself about what you are afraid of or what triggers certain emotional reactions, well, then these are just a bunch of words, and it doesn't matter what we say, right? So I think we all should at least be willing to say, okay, I'm going to be honest with myself. Whether I'm ready to change that at the moment or not is another conversation. But at least let's be honest. Each of you be honest with yourselves on, you know what, I need to do better at that, or that's a problem for me, or because these are things that are going to, at a very minimum, hinder your progress in trading, and at the worst, get you out of the game completely. That's the honest truth. These are things we have to confront. And so, of course, there you go. We can't be paralyzed if we need to act. Those two things don't work together.
Yeah, absolutely. And another thing, you know, fear can cause trading errors. And, you know, if you've listened to Mark Douglas teach at all, and he's got some good videos on YouTube, he's got a couple good books out there. And he's a big proponent that, you know, most of our trading errors actually come from fear. And so I'm like, oh, okay, wow. Well, if we can really work through this whole fear problem, we can eliminate so many of our trading errors. And at that point, if we're making very few or no trading errors, that doesn't mean that we're always going to be profitable every single trade, but that means that we have a much more or a higher probability of being consistently profitable over time. And so these, you know, fear in these, the trading errors that are caused by fear is a very real thing.
Yeah, and I think one example of that just in trading, David, would be we kind of tend to think that even if we admit we have a little fear about operating in the market, many of us will. I think the fear we will attach value to the fear being, well, if the market does this, I'm afraid of the market doing that. Okay, I'm in a stock, I'm afraid the market's going to go down, right? Okay, we can say that. But the truth is that we're afraid how we're going to feel if the market does that. The market's just moving. Like it's our reaction to what the market does that we're afraid of. We don't want to feel that. And so that's kind of a foundational thing that most people don't recognize until it's too late, or that they've gone backwards longer than they needed to. And it's really, we're afraid of how we're going to feel, or we're afraid of some past mistake. And oh no, it's going to happen again. And here we go again. And I just lost the last trade, fill in the blank. So it's really more about us.
Absolutely.
In some level, we're afraid of that. Oh no, it's up to me. Oh, is this ever going to work if it's up to me? Believe me, I've thought that many times. Absolutely.
And that kind of brings us to this next one here. And this is a direct quote from Mark Douglas. He says, and we'll talk through this one because there's a lot in this. He says, fear causes us to focus on the object of our fear, so we end up creating the very experience we are trying to avoid. So you could think about this as like, we have a fear of losing money in this trade, where we really haven't truly accepted the risk, and we're in this trade and we're afraid of losing money. And that fear can actually cause us to make trading errors. And now that we're making trading errors, we mess up the management on this trade. And now we take an expense on this trade and we're losing money. So we were afraid of it. And so we messed it up, and we caused the exact same thing to happen that we were afraid of, even though the trade might have at a point could have been a profitable trade. It's kind of it's a weird thing to think about, but we can mess it up so bad in our heads that we actually create the fear that we have.
When I read that too, I think, oh gosh, we're not going to be able to go into as much detail. I told David, man, I don't know how long this thing's going to last. We have some bullet points, but then you start, really the truth is you start reliving some of your own fear experiences in your past trading, and you go, you know what, this will probably help somebody. Let's talk about that. When I read this statement, I think of two things. The first is a deeper, more underlying issue, right? Like what you focus on, you become. What we walk in, who we hang out with, what we focus on is what we become. That's really kind of, this is a trading way to say that. Mark Douglas is really kind of saying that. A practical example, like David just mentioned, would be, I get in a stock, I haven't really accepted the risk. I mean, I know I put X amount of dollars in the trade. I hope you know, but I'm really not okay losing what I'm going to lose if this trade doesn't work. So you haven't really accepted it, right? You're afraid to lose that money. Then you get in the trade and the stock starts to move against you. And because you are afraid, you exit the trade before the predetermined area you said you would exit at. Locking in a loss based on what? Based on the fact that you were afraid to lose. Then your stop loss never gets hit. The pattern continues to go up. It ends up being a highly profitable trade. You just created the very experience you were trying to avoid by not kicking the fear mindset before you got in the trade. And that's just an everyday practical example of human emotion. And, and of course, we're going to talk about planning and that kind of thing, but that's why it's so important. That's why it's so important to at least to highlight these, recognize that they exist to some degree, probably in all of us, and then make your mission in your trading plan to completely circumvent these things. We're not going to eliminate all fear in our lives. It's just, I mean, I think we have the ability to on some core level, but we really need to be able to circumvent fear and greed in our trading. That's what half my trading plan is designed for, is to sidestep my own, weaknesses. So that's a big one, and it is a real one.
That's great, Jared. So we've talked about, the importance of learning how to overcome some of these fears, because it really is essential to being a successful trader. And we've talked about not all the different ways, just a few of the different ways that fear can actually hurt us in our trading. So let's actually talk about these fears. What are some, 5 of these fears? And of course, there's many more fears out there, but we're just hitting 5 common ones of some people that are trading, or some people that maybe aren't trading yet, but haven't even begun trading yet because of some of these fears. So there's a few of those in there as well. So let's talk about this first one.
As you bring that first one up there, I'll just say this. I think this is probably a good thing to have in your mind, folks, as we go through these. And that is that, remember we talked about fear can create inaction. I think one main reason is, here's your first one, is because our responses to things that are unknown are boilerplate objections. They're just trading. Oh, it's risky. Or whatever, we're going to go through 5 of them, right? But it's just like there's these boilerplate reactions that we take, or that we form, that create mindsets that they're false. They're just false beliefs. And so we have already created a losing proposition in our own mind before we ever observed what's available to us. So try not to evaluate anything new with a boilerplate excuse based on some past experience. If you come to the same conclusion after thinking about it, great. That's okay. That's different, right? So let's not do the boilerplate, I can't do this because. Think in those terms as we go through these fears. I think it'll help.
Absolutely. So, the first fear that is what, we're bringing up here is probably the most common one. It's simply the fear of losing money. And losing money is part of trading. We at TRADEway, we cannot promise you that you will make money. We're not allowed to do that. We don't know the future. What we have been allowed to do from the SEC is promise you that you will lose money at some point. If you keep trading, you're going to lose money on a trade at some point. But we're here to tell you that that's okay. Like that's part of trading. It happens to everyone, and there's ways that we can mitigate that and control the money that's lost, so it doesn't become this massive thing. But this is just part of it.
I'm gonna chime in a second. I want to see your bullet points, and then I'm gonna come back.
Yeah, let me get all the bullet points. I think that's just 3 on this one here. Yep.
Okay, so losing money is part of trading. Understand, folks, if you're new, you're going, well, wait a minute. Isn't the goal to make money? What are you talking about? We could have capitalized and bolded part of trading. In other words, again, one of these preconceived notions about, trading, some guy on Twitter is posting how he made $1 zillion last month. And you think, that is the standard, or as if it's real, as if you have any way to know that. But that's the standard. It's either this, this is going to be, I'm going to be financially independent in 3 weeks, or, which I think is a limiting belief because it's most likely false, right? Or the boilerplate excuse of, why you're probably going to lose money trading. Well, if we dig in just a little bit, you recognize that when we say losing money is part of trading, we don't mean your net result. We mean you better get used to trades moving against your expectation, and you stopping those trades out is what we call it, or exiting those trades for a controlled limited loss, so that the trades that do work overcome those. But you're not going to go through trading without losing in a trade, right? Without having a trade where you bought at one price and you sold for less. That's part of it. That alone is a fear for people. David, even if I told somebody, look, if you can define a system where you have the winning positions end up exceeding the losing positions in amount and potentially occurrence, in other words, you win more than you lose. If you can do that, it's a mathematical certainty that you will make profit over time. If you can do that. Now, the if is, where's the system to do that? And we'll talk about that a little bit. But the other thing is about losing money. Okay, my fear is I'm going to lose money. Okay, compared to what? You're going to lose money compared to what? Not investing at all? Do you have no investments at all? Because no investment is without risk. So again, boilerplate excuse or mindset that's limiting, because you're investing in something. If you're not investing in something, you're invested in the US dollar. Does that feel good right now? I'm just making a point. You're investing in something. So when you say, oh, I'll probably lose trading, compared to what? Compared to buying a stock and holding it forever? Have you guys seen some of the crazy growth stocks that started during that COVID recovery and ran up hundreds of percent? Has anybody been paying attention to some of these growth stocks in the last 3 months? Many are down 40 to 80%. So is buying a stock and holding it forever, do you have the risk of not, are you not going to lose money? My point is, think about what your snap answer is and think a little bit deeper. So again, I would agree with you. Losing money should be a fear if you have no clue what you're doing and you're just going to jump into something haphazardly. But I think we should be asking ourselves, wait, compared to what? As a matter of fact, I have another compared to what question coming up in a little while. But yeah, I think this is just one where, well, I'll probably lose money. Well, that's not quite enough. No, that's not enough of an objection. David and I are not going to accept that objection today. Okay.
Absolutely, Jared. And you know, like you mentioned, we like to teach a system that helps to mitigate that risk. And there's several different things that we can do within specific trades to help manage how much money, you know, you could lose in that. But we also are looking at a series of trades where the goal, of course, is in the long term to make money. But we have to accept that there might be some trades in the shorter term that will lose money. And you know, I have this quote up here, and I wish I remember who said this. I don't remember if this was Mark Douglas, but it struck me as kind of interesting. You know, he said, if you haven't lost money trading recently, then you aren't taking enough risk. Essentially, what he's saying is, like, if almost all of your trades are turning into winners, you know, you're not really taking enough risk. And that we can really dive deep into this, and we don't have all the time for this, but I mean, if you are taking trades that for the most part just are not, almost never losing, it means you're making such a small amount, you know, but you are risking a lot. And so anyway, it's just one of those fears, losing money, and if we can actually hurt ourselves if we don't accept that risk.
Yeah, and I think it's just something that'll always be there. That not always be there as in you as a trader, but this will be a common fear for those who aren't willing to just dig down a little bit more. And let's face it, some people just aren't going to do what it takes. They're not going to do what it takes to get started. They're not going to do what it takes to keep moving. They're not going to say, I'm going to learn this because I know it can be powerful for me. They're just, this losing money is where they'll stop. Well, then, okay, that just means they're not ready to take on the responsibility of starting a business or trading, or you name it, right? Depends on what that action is. But if you're afraid of losing money, you can't, it's hard to invest in anything, isn't it? So good point.
Yeah. Now, this next fear we have is it kind of ties in, you know, fear number 2, choosing a bad trade. Well, you might think, well, that's kind of the same thing because we're talking about losing, but I want to, you know, dive in a little bit deeper, because let's define exactly what a bad trade is. People often think, well, a bad trade just means that the trade didn't work out and you've lost money on that. But if you know, what we said before makes sense, you know, we've told you that some of your trades are not going to work out, and that doesn't mean that it's a bad trade. So let's actually define what a bad trade is. A bad trade is one when you don't have a plan. You know, if you just jumped in, you bought a stock, or you bought, you know, an option, entered any kind of a trade, but you didn't have a plan of where to stop out of that trade. You know, that's defining your risk. That's accepting the risk there. You don't have the plan of where to stop out, or you don't have a plan of when to take profit. There is no plan. At that point, that's not a good trade. There's no plan there. You can really hurt yourself. Or the thing that goes along with that is ignoring your plan. Maybe you jump into a trade, you have your stop out, you have your profit target, but your emotions get the best of you. That fear gets the best of you. And now you make a trading error, and that trading error is ignoring your plan. You know, just, well, you know, this was my stop out, or this was my profit target, but, you know, man, this is getting too much for me. It's getting too hot. And so you throw your plan out the window, you ignore it, and you go do something else in the moment with those emotions that are guiding you. That's a bad trade.
Yep.
And those will pile up and can cause you to again lose money, which is that fear. You're causing that fear to happen.
And you kind of have to accept fear, some of the bullet points from fear number one, to recognize that your bullet point here makes sense, right? You have to accept the fact that you're going to lose money in trades. You're not going to win. Not every trade is going to be profitable, right? If you can really, truly accept that, then coming to this idea of defining a bad trade as either not planning it or not acting on your plan, you're building on something here. We're building by breaking down some of these fears, right? So you're taking a step up saying, okay, all right, I'm going to accept that I don't believe I'm going to win 10 out of 10 trades, David. If you haven't traded before, let's just let you in on a secret. You're not going to win every trade, right? So accept that, truly in your heart, accept that. Well, that leaves you to a place where you can go, okay, hold on. I know I'm not going to win. That means I have to do what? I have to have a plan for the ones that aren't working. Because if I know they're coming, then I need to know what to do when those start to happen, especially if I want to consistently employ the advantage of my system. We're going to talk a little bit about that later, right? So having the plan is important. And like David said, you have to step through that plan with the understanding that not every trade's going to work. So we're building on this here. All right.
Absolutely. And, some of the best traders in the world win about 60% of their trades. So what's another way of saying that? Here's another way of saying that. Some of the best traders in the world lose 40% of their trades. 40% turn into losing trades. So again, this is all building on the fact that losing money in trades is part of trading. Some of the best traders do it. They do it. It just happens. We just have to accept that we are going to take trades that are going to turn into expenses. And that doesn't mean it's a bad trade. Again, a bad trade is when you don't have a plan or if you ignore your plan. But if you have a plan and it doesn't work out that time, that doesn't mean it's a bad trade. And so we call these losing trades expenses because it is simply a business expense that puts us in a position to be able to take profit if that trade were to have worked out. That's all that is.
Yeah, so a losing trade is not a bad trade necessarily, right? It's not a bad trade simply because it was a losing trade, right? And that's what David explained there. So accepting this fact that, okay, I better have a plan. I know I'm going to have trades that go against me. I need to have how do you think it's possible, everybody? Let's just take that example and say the top 5 highest performing traders in the world win 6 out of 10 trades. I think that's probably, there are stretches of time where we can get hot, right? You go on a run inside, you flip a coin enough times, you're going to get 5, 6, 7, 8 heads in a row occasionally, right? We know though, after 1,000 flips, it's going to be 50-50. Let's just stick with that 60% for a second before we move on, David. How is it possible that they are the most successful traders in the world, some of them making hundreds of percent per year, maybe not every year, but triple digit returns per year, if they're losing 40% of the time? The only answer is that they have a system where they're allowing their profits to be bigger than their losses, right? So if you accept that, first of all, you've got to build a plan. This is what we're going to try to help you with if you're willing. You have to build a plan around that and then accept the fact that when the trade goes against you, all you're concerned about is cutting the loss before it gets too big, because 4 out of 10 of these are going to be losers, even if you're really good. So that should make it easier to overcome this fear of, well, that was a bad trade, And I'll hear people say, oh man, I got in this trade and I thought I was going to be able to stop out at this level and the market got really crazy volatile and it dropped further than I thought. So I actually took a bigger loss than I expected. That was a bad trade. Hold on a minute. You just said you wanted to get out at a certain price. It moved a little too fast and you got out as soon as you could. That's a good trade. You were trying to execute your plan. Things are not perfect. That was a good trade. It can be really tricky to tie your decision-making based on the results of any single trade. Now, if we go through 10 of your trades in hindsight, right? And you go, man, I'm going through this and going, hey, it hit my area where I was in trouble. I got out. Hit my profit target. The next one I got out. We go through 10 trades and they were all good trades based on the way we've defined that, meaning you had a plan and you followed it, and your results are not good. You're losing money. Well, guess what may not be that good? The plan, right? It's okay to admit your plan isn't working. We could go change that. What you can't bend on is your willingness to act in the plan, because then you've got a level of trackability, right? You can track your actual results. So really, really important. And I do think this last statement, I think it's the last one on here, is this, the first time I heard David Mitchell say this, I mean, it made sense to me. I didn't really absorb it and it didn't become a part of me for a while, but it's really easy. If you come to this as some flippant thing that's going to be a hobby for you, and you know you're going to kick it around a little bit, then you're going to feel like losing trades or losses. But if you're identifying what you're doing here as a business from a mindset standpoint, then those will simply be, that's just a business expense, because I know the profitable trades over time will exceed that. So the balance sheet works out, right? But expenses, that word, this is a business word. It's a business mindset. That's based around mindset, not on how much time you spend doing this. In other words, some people, David, are going, dude, I got to pay bills. I got kids. I got to work. I got health insurance. I have to go make money. I have to work. I only have 3 hours a week, right? That's not a business. That's up here. What do you do with those 3 hours a week, right? If you're being diligent, particular, focused in those 3 hours a week, and that's all you have, then you're treating this like a business. You can't trade with somebody else's time. You can only do what you can do. And so you have to make the decision, is it worth me putting in this effort for these 3 hours a week? And I'll tell you right now, I believe it is. If that's all you have, I still believe it is, because you can build some skill sets doing this that you would never have otherwise. But it's a mindset thing. Not, well, if I don't have 20 hours a week to do this, it can't be a business. That's not true. That's how you're thinking of it. But it absolutely can be a business, and losses are expenses as long as they're within your plan.
That's great, Jared. That's great. I appreciate that input there. Third fear, we're just keep rolling on here. Third fear, market volatility. Wow. Now, if this is not a timely one, I don't know what is. You know, the market was a really nice, strong bull for a long time in the last few months. If you've been following it at all, you know things have gotten volatile. Things have started to go down. There's not just within the market, but there's fear out there in the world going on right now. And there's a whole war going on right now. So the market has been reacting to that, and volatility is probably at its highest since that, you know, COVID crash that lasted a month, right at 2 years ago. So market volatility is a big one. And, you know, as traders, it is okay to take a break during high volatility. We like to trade on an edge, you know, when we know, hey, the probabilities state that, you know, over time, I should be able to make money. You know, that's an edge. Now, during high times of volatility, we may not have an edge. And at that point, it's okay to just take a break from your actual trading. You can still paper trade, you can still learn. But that doesn't mean that we have to fear the market volatility. We just may be at a point in our trading where we just need to take a break.
Usually we fear what we don't understand, right? I mean, that's just a general, we probably could have led with that. I guess I should have thought of that to start there, but we generally fear things we don't understand. You know, you don't understand how and why the market's moving. You don't understand how to chart where the probabilities are of the next movement or what's happening in the market. Well, then you're generally going to have some fear around trying to interact with that thing, right? So I want to, David, get through these important points, and I have a couple thoughts on market volatility that, again, are going to go back to a foundational boilerplate answer.
Absolutely. Yeah. So, you know, when we learn more and we understand these things more and we gain more skills, this volatility could mean more opportunities. At TRADEway, we actually have several strategies that are built around, you know, volatile patterns and market conditions. So some of what you're seeing in the market right now, there's traders out there that are looking at this as many opportunities. For some newer traders, this might be a time to, step aside, take a break, not be fearful of the market, but just kind of acknowledge that it's volatile and we just need to, stay out for now. But for some traders, they see the volatility as, opportunities galore, and they're really diving in, and they like what they're seeing because the strategies are built for that. I believe, yeah, there we go. And so this kind of goes back to what Jared said as well. It's all about perspective, and perspective changes with knowledge and skill. The more that we know and understand, the more knowledge and skill that we have, the more that we can see things differently. And that's the difference between I'm staying out during the volatile times, or I'm going to take advantage of the volatile times.
And this kind of leads back, my thought here leads back to the last slide a little bit, which is, okay, market volatility. Well, why are you afraid of market volatility? Because you're afraid it's more likely you're going to lose money, right? I mean, otherwise you'd be like, hey, market volatility, fantastic, because you'd have a skill set. But if your answer is, oh, the market's too volatile. Have you noticed almost every slide here, I've actually had a question to ask in response to the slide. This is also how I teach a lot of times, because, and I think it's actually a good way to think, that if you have a snap judgment on something, ask yourself a question that's a little more leading. So market volatility is a big fear. I don't want to participate because the market's too volatile. Okay, I'll ask you again, volatile compared to what? If you're going to say it's volatile, then you have to have a definition of that compared to some other thing, right? Volatility, oh, it's up and down too much. I don't know, I'm going to be in, I'm going to get in, and it's going to go down, I'm going to lose money, then I'm going to get out, it's going to go back up. Okay, that's volatility. Okay, if that's your definition compared to, again, I'll just use the example of before, buying a stock and holding it. Do you think some of these growth stocks being down 75% from their high right now is not volatility? Are you saying you're not going to invest in stocks at all? That means you probably don't have a 401k, an IRA, or any of those things, because they're going to have investments in stocks, even if they're mutual funds. What are you comparing market volatility to? And then further, and this is where skill sets are important. That's why this last piece, that last bullet point is huge. Your perspective can start to change when you go, now, wait a minute, David, I know that there's market volatility. And if right now, this isn't the case for most of us at TRADEway, but if right now all I did was trade shares of stock, don't know anything about options, I don't know how to build an extra probability, I don't know how to make money when the market goes down, all I do is buy stocks. Since November, early December, I suppose, late November, early December, this market is, the indexes have been in a downtrending price pattern, right? If you had some skill sets and you could define when the market's less likely to start moving up again, David's first point here says, is it okay to take a break? If you don't feel like the market's moving in your favor and you have a skill set to define that, you're actually, trading allows us to be nimble and quick. And so instead of, again, compared to what, right? Compared to just holding a mutual fund and letting the market go down 68% like in 2008. That's what happened in 08. Was that not volatile? Did that feel good? So I'm challenging you to compare a boilerplate objection to something that have a plumb line of some kind so that you can define what volatility is. In my perspective, I'm going, first of all, we could get into some details. Oh, volatility, that means if you have skill sets to time these things, that can be really good. But I'm talking more broadly. Compare it to just buying stuff and holding it like a mutual fund, and you might go, you know what? Having a skill set actually can put a magnifying glass on what market volatility is. And if nothing else in the beginning, you can avoid the things that you want to avoid by understanding a few metrics in the market. And then furthermore, the more experience you get, market volatility actually can create opportunity, which is what David alludes to with the last couple of statements there. So again, compared to what? Have an idea of what you're objecting to or what your fear mindset might be.
Great. Well, this fourth fear is going to have a little more to do with if you haven't started yet. There's a lot of people who are on today that maybe aren't in the program, they haven't started trading yet. And, one of the fears out there is just, maybe I don't have enough money to trade. And there can be kind of this misconception that I need a lot of money in order to be able to trade. And that's just not true. It takes a lot less than you would think to get started. In fact, David Mitchell says that you can, fund a trading account and start with as little as $2,000. Most of us can probably come up with $2,000. It's not like we're out there with, the amount of money that you need to buy a car or buy a house or whatever. It doesn't take a whole lot to get started. So that's something that we want to keep in mind. And you know what, even if you don't have the $2,000 yet, and that's just kind of there's no magic about the number 2,000. You can start with less, you can start with more, but there's just a point being made, like, look, you don't need that much money. Even if you have $0 to start with, you can still paper trade for free. You can still start developing your system for free. So there are things that you can start doing today, no matter how much or little money you have to put towards trading.
I would actually add to this and say, oh gosh, go figure, another question. Well, I don't have enough money to start. Okay, for what goal? I mean, like, is your only goal to pay all of your bills and fund all of your retirement and all of that, and that's the standard, and you don't have enough money to do that? Well, now you're just limiting yourself based on an arbitrary standard that you don't have to meet. In other words, you don't have enough for what? You don't have to have $2,000 to get started. There are plenty of stocks out there that trade at $25, $35, $45, $55. If you got $500 and you want to get started, it really matters how you're defining what you want to accomplish. Now, if you only have $500, let's start with $2,000. If you only have $2,000 to use for your investment account and you have $5,000 a month in bills, well, let's not be stupid here. Don't think you're going to pay your bills trading $2,000 to make $5,000 a month. A little bit of levity, right? Like, let's be realistic, okay? However, if your mindset is, look, I've only got this $2,000, but this is money that I've decided I can learn with, okay? This is not money. I'm getting a little further along here, but this is not money, but this comes back to fear, David. This is not money I have to buy bread next month. Right? This 2,000 is like, okay, I've put this aside. I'm willing to learn with this. I'm willing to start putting a process in place. Then your goal can be, I'm not going to tell you what your goal should be. Your goal can be, what can I accomplish with this $2,000? Instead of, can I pay my bills next month? I've never done this before. I can tell you the answer is probably not. I mean, come on, you're just starting. But can I take 2,000, David, and can I make it, 2,500 in 3 or 4 months? Can I make it 3,000 in 6 or 8 months? Can I double it in a year? Could I just throw some things out there and ask yourself, can I make forward progress doing something I'm just now learning? This not having enough money to start thing drives me crazy, because I'm like, do you want this or not? If you want to do this, I don't care how much you have. Now, if you have $0 that you can put into a trading account, you're like, I literally don't have an extra dollar, then I think you go to the last statement here and the question becomes more of a heart issue. Do you really want this? Because if you do, you'll find a way to save a few bucks. We use 2,000 as just, sort of a number to throw out there. But if you want to do this and you can put together, you hear Dave Ramsey say all the time, you could sell a bunch of junk in your garage and make $5, $6, $8, $1,000, and then again, attach your statement of I don't have enough to start to some kind of an outcome that's realistic. And I would really recommend, honestly, even if you had 2 million to start with, I would highly recommend that your focus in the beginning of this process is just that, formulating a process, right? We talk a lot, David, on pretty much every forum we're always in about this idea of process before profits. You can lose 2 million as fast as you can lose 2,000. You can risk as much as you want in the market. That's the truth. That's the cold, hard truth. So it's really more about what can I do with what I have? I understand somebody would rather be trading with 20 grand than 2 grand, because if I make money, I'll make more. Well, that pendulum swings both ways. So even if you have 2,000 and you could afford 20, why don't you start with 2? Start with 2, work through a process, have a plumb line of what you're comparing not enough to, okay? And I just think not having enough, just, I don't like the sound of it. It's a lack statement, right? And I know we have to be realists, but that, I've gone on enough. You have enough. If you have 0, you still have enough if you decide I'm going to do this eventually. And if it takes me 6 months to save $500, that's what it takes. But I want to learn this and I want to do it. You already have enough. Really, truly. Now you don't have enough to pay your bills, probably. Well, that's next. That's a goal, right? Maybe that's like a longer term goal for you. That's where you start and where you go. But to the point of the statement, you don't have to have 50 grand, 100 grand, $250,000 to participate in the market, particularly in this day and time with all the technology. So sorry, I went a little crazy there.
That's great, Jared. And I wish I had heard those things when I was first starting, because
I told you. I'm kidding. I'm kidding.
It's even if you have $20,000, $50,000, $100,000 to start trading, if you're brand new at this, don't fund your account with the full 100,000 or full 50,000. Just when we're talking about small money trading, let's also maybe do small money funding of the account. Because then if you mess it up and you blow up your account, you hit the wrong buttons, whatever, it's really just that small amount. So if you have 50,000 that you can start trading with, maybe just fund your account with 2, 3, or 5,000, just something very small. You can always add more in later. You start working through your system. You're like, hey, this is kind of working. I'm getting this. I've been doing this for 6 months and I've got, it's got some profit in here, and I think I'm ready to step it up a little bit. So, I'm not going to put the rest of the 50,000 in there, but maybe I'll add 10,000 to it and then see if I can continue to have the same results that I was having with that smaller money. And if I do have those same results for the next few months, I'll add more, and eventually I'll work up to putting that full amount in there. So this is kind of an interesting fear because, it says not having enough money to start, but I want us to be careful, like make sure you don't start with too much money, as you and I, as we're now more experienced, like that's almost a fear of mine, or maybe that should have been in a way a fear of, like, actually be fearful of starting with too much, because when you start with too much and you don't understand how those emotions are going to get the best of you when you're brand new, I mean, that fear can cause you to lose more. And so this is kind of a very interesting one because we just turned it right upside down here.
And by the way, too much is relative, right?
Absolutely.
Too much for one person could be 10,000, and another person it could be 1 million. It's not relative to the amount; it's a relative to what that amount means in your life, right? Mm-hmm. So too much is probably relative to what you have to start with. But the point that we really want to get to there is this is a false belief, right? And this is what fears are, is just false beliefs. This is another one's pretty obvious.
Yep. That's great, Jared. All right. The last one that it brings us to here is, whose advice to trust. And so I guess we kind of got to explain that fear. It's like the fear might be, well, I don't know who to trust out there. I don't know what to do. So let's run through some of these bullet points, because it's gonna help explain it pretty quick here. Let's start off with talking about who not to trust. Let's just start right there. Instead of who to trust, we're not going to trust the news, right? And I hope by now everyone, that's kind of like a statement. There's fake news out there. The news has an agenda. The news, it's not, especially in trading, it's not what you want to listen to get your edge. So we just don't trust the news. You're clicking around online and you see, this article, like, the new hot tip or whatever. Don't trust the hot tip, because oftentimes those guys that are putting that out there, they have ulterior motives, and they actually want you to follow that tip because sometimes they're on the other side of that trade. This actually has happened before. People have gone even on TV and like, oh, this stock is going to go to the moon. Everyone should be buying this stock. and then you look at who's actually on the other side of that trade, and it's that same person who is selling that stock. He's just kind of talking this stock up so that he has someone to buy it from him without tanking the price. So don't trust the news. Don't trust the hot tip. I'm not going to say you can't trust your friends, but don't buy just because a friend said so, or even if that friend entered into the trade themselves, just because they did it doesn't mean that we should do it as well. So, then the question is like, okay, well, but who do we trust? What do we do? The one to trust is you. You need to trust you. You need to trust your system. And that's why you need to spend the time to work on your system with, paper trading and small money trading, so that you can kind of build a relationship with that system and gain a trust with that system so that you can trust yourself within trading. And, we've mentioned this system many times, and, that kind of brings us to the last bullet point here. Like, if you don't have a trading system, we can help you with that.
Thank you to see John's comment in chat. Mr. Oakland said, obviously be careful with Jared and David's advice. Like, right? Don't take advice from others. Don't listen to anything we just told you. Look, no, what I think is honestly, John's kidding, but somebody probably is like, well, hold on a minute. Didn't you just give us 5 bullet points on how to circumvent some of these things? Isn't that advice? The point is this: these don't statements are talking about blindly following some other person because they said, right? Even last night, right, I hosted the online study groups for our Trader Max and Trader Pro memberships, right? Every time I host, David, you can speak to this from years back or whatever. Every time I host something and we're looking at a chart, it's incumbent upon me to remind everybody, this is what I see. Me, like, this is what I see. I can't describe what somebody else sees. It's only what I see if I'm looking at a chart, right? You shouldn't be making decisions based on what I see. You should be accepting that information or refuting it and deciding whether that makes sense for you. Because my particular little preference in a chart might not be yours. So there may be trades that I say, this looks good right here. You could buy it. Your loss could be limited at this level. You could make, it looks like it could move up to make this much profit, blah, blah, blah. And you might just say, doesn't really fit for me. If you get to that place, you recognize you've done something valuable, which is you're thinking for yourself. You've built, some people are going, David, did you just say, trust my system? I have no clue how to build a system, right? Obviously, that's part of what we do here. What I don't want you to think, if you're just kind of, coming to us and just interacting with us for the first time, or you're pretty new, is that this is not we give you a 10 bullet point sheet and you go out and make money. And if somebody tells you that, I hate to break it to you, but if somebody tells you that's how this is going to work, they're lying to you. That's just the way it is. Trading doesn't work that way. Now, that doesn't mean we don't have bullet points, okay? That doesn't mean we don't have guidelines. That doesn't mean we can't define how you can build an edge for yourself. But ultimately, interacting with your own rule set and making your own decisions is really where you will find traction in this eventually. How long that takes you will be how willing you are to work at it. But it's not about trusting somebody else. I do think there's something to be said for you can trust the heart of TRADEway and what we want for you. And we're going to try to help you build your own system within a framework that we think makes sense, okay? But get educated. Don't just trust advice. Get educated so that you are thinking on your own, even if that is with input from me and David Mitchell and Ben Russell and Blair and Jeffrey and whoever, right? So, but understand and use the perspective. Come at this from the perspective that you're using the information coming in to filter and build something of your own within a certain level of framework that we're going to help you with. You will be so far ahead of most people that are interacting with the market today, it will blow your mind. That doesn't mean you're going to make $1 million your first year. It has nothing, there's no monetary result attached to that. I'm just telling you, you'll be ahead because you will potentially go through less strain, struggle, and pain than a person who's like, well, you told me to do it and it didn't work. And they didn't take any responsibility for that. So we're trying to get you started on the right foot that's going to get you going toward an acceleration into success without going backwards first. And that's why, yes, we could say, here, yes, it's advice to tell you don't trust the news. Yes, okay, we're saying that's advice. I don't just want you to take my advice blindly, though. And David doesn't either. And that's what he said. If you don't have a system, we can help with that. We want to help you formulate a system based on a framework that you can fill in, right? It's like a blueprint. You got to go put the foundation and all that, but we'll give you a blueprint. And that basically leaves you in control of you, right? David Mitchell has said for years and years and years, this summer, July 9th and 10th will be my 11th anniversary of being introduced to the stock market through TRADEway, right? The very first day, the presenter at that seminar, was a live seminar, said, we're going to teach you how to fly your own financial plane. Notice that didn't say, hey, sign up right here, we're the pilot, jump in and relax. That's not what it said. That's not what we're doing, right? Because that's not going to be lasting for you. The only thing that can be lasting for you is you taking responsibility for those decisions. So overcoming these fears is going to be a big, big step in that process.